Welcome again, ladies and gentlemen. This is Sanford Khan, economic consultant and business author. Today we're going to look at how to sell call options on Tesla stock, not only to boost your income from the stock. We're going to look at three scenarios, but also reduce your risk. I've done this with three other stocks that are listed on my channel. That would be Microsoft, Facebook, and Apple. You may wish to look at those. They're already posted. You may be thinking about buying these stocks. This is a simple way of generating extra income. A call option, remember, we're selling call options. One call option represents 100 shares by definition. A call option gives somebody the right, but not the obligation, to call 100 shares of your stock away from you at a certain price, that's called the strike price, within a certain time limit. So we're going to be using the prices on Tesla stock. The symbol, by the way, for Tesla is TSLA. And I'm going to use the prices as of the close November 5th. That's a Thursday, round to the nearest dollar. No cents here. And if you're going to use this strategy, I implore you to use a brokerage outfit that charges no commissions. The only commission I pay when I do it on my stocks is for every option the company that I use charges me 60 cents per option, which is nothing, absolutely nothing. Just for the matter of full disclosure, I do not own any shares in Tesla stock, nor am I, as of right now, nor am I planning to buy any. It's a little bit too rich for me, and the price-earning ratio on Tesla stock is absolutely into the stratosphere, and that makes me uncomfortable, but other people like it. Obviously, it's an actively traded stock. So let's look at it. It closed Thursday, November 5th at $438 a share. The 52-week range on Tesla has a low of $63 a share and a high of $502 a share. Well, that's one big of a spread. So remember, one call is equal to 100 shares, and a call gives somebody the right to buy the stock from you at a certain price within a certain time limit. What we're going to look at is the January calls, the January 15th calls. That's 70 days from this Thursday, November 5th. That's 70 days from there. You could go in, and they have an option screen, I'm sure, on your computer screen, who you ever deal with. I don't know who you deal with, but they pull down screen and you could pick any time limit you want. You could go shorter, you could go longer. I just picked 70 days. If this is suitable, you only do this if this is suitable for you. I'm not asking you to do it. Remember, it's got to be suitable, and only you could decide that. So I'm just giving you some examples. You could take it from there. So let's say you're bullish on Tesla and you feel that it could go up some more. Not a lot more, but some more, maybe 30, 40 points more. So you want to take some money out of it. You notice Tesla does not have any dividend. So what you could do, I'm looking at my notes here. What you could do, you could sell a January 15th call, that's 70 days from Thursday, November 5th. You could sell a January 15th call with a strike price, an execution price of $470 a share. $470, don't forget, it closed at $438. This won't be executed unless Tesla gets at $470 or even goes above it. There's no reason to execute it or call it away from you if it's less than $470, because they could go into the market and buy it cheaper than calling it away from you at $470. If it goes to 470 above, it will be called away. No ands or ifs about it. But anyways, you're going to sell somebody the right to buy the stock from you between Thursday, November 5th, and January 15, 2021. And for that right, they'll pay you premium dollars, good green dollars, into your account. It's called premium. That's your money to keep no matter what. It's yours. You could go to Vegas with it, take a vacation with it, go skiing with it, go to a nice place, or you could just save it and invest it in something else. So as of the close of prices on Thursday, November 5th, for that right that you're selling somebody, buy 100 Buying 100 shares of Tesla from you between November 5th and January 15th, they will pay you into your account $3,420 for 100 shares. If you have, 400 shares, you may wish to do this on 100 or 200 shares, not on your whole portfolio. It's just something you may want to play around with. That's $3,420. That's your money, period. And don't forget, it won't be called away from you unless it goes to and stays above $470 a share. Okay, that's the bullish scenario where you feel Tesla could keep going up some more. Not a lot more, but some more. Okay, let's say you're of the mindset that Tesla is going to trade in a narrow range. Go up a little, go down a little, but it's not going to go through the roof anymore because basically it already has. The low is $63.52 range, and the high was 502. So you can say, okay, it could go up some more, or it could go steady, or go down a little. So what you could do, don't forget it closed at 438. You could sell somebody the right to buy from you. Buy from you 100 shares of Tesla at $450 a share. Don't forget it closed at 438, so that's $12 more. Between now and January 21, 70 days, and for that right, they will pay you $4,260. $4,260. We're talking about real money here, real money. This isn't counterfeit, friends. This is real premium they're paying in your account. It's your money to keep. Don't forget, it will not be executed or called away from you, is what I mean by execution, until it goes to 450 and above and stays there, especially on January 21. If it is at 450 or above, it will be called away. It could also be called away sooner. Let's say it goes to $480 and somebody wants to call away before execution, before January 21. It could happen. It makes sense then, because they could call away from you at 450 and it's at 480. They could do it. They could do it any time between November 5th and January 21, as long as it's at 450 or above. Always. Okay. So now you're of the mindset. There's just three things I'm looking at here. One up, sort of sideways or in a band. The other one is down. Let's say you say to yourself, I think Tesla will do okay, but it's gone up so much, so fast. This thing could go down a little. Not a lot, go down a little. Correction. So you say to yourself, I want to protect myself on a downside. Not a huge protection, but just downside. So you could say, I'm going to sell somebody the right to buy 100 shares of Tesla from me at $420 a share between now and January 21. It's January, I just been saying January 21. I really mean January 15th, 2021. I'm sorry for that. I was looking at my notes and I had it abbreviated. It's January 15th, 2021. So you're going to sell somebody the right to buy it from you at $420 between now, November 5th, and January 15th for $420. Don't forget, it's $438. So you're saying, well, I'm going to take a loss then. No. For that right to buy it from you between now, November 5th, and January 15th, they will pay you $5,675. Almost $5,700. $25 short. So if you add $57 to $420, that's an equivalent price of, this is high math here, friends, addition. That would be $477. Equivalent price, $477, and it closed at $438. So that gives you downside protection. And you will get $5,675, close to $5,700 in your account. That's your money. If Tesla stays above 420 anytime between November 5th and January 15th, they will call it away from you, especially on January 15th. They will call it away from you. No and buts about it. If it goes below 420, especially on January 15th, 2021, I'm getting mixed up on my dates here. I'm talking about January 15, 2021. If it goes below 420, no, it won't be called away, and you have the right to. This will expire worthless. You will have the right to sell another one, and whatever length of time out and whatever strike price. Don't forget, you don't get something for nothing when you get this premium. Is unfortunately it is taxed at regular income rate tax, but you're getting it up front and you're paying the tax later, so it's your money to use at that time. Anyways, do this only if it's suitable for you. This is just a little instruction kit, you might say, to give you an idea how this could happen, how you could pull money out of your stocks while you still hold on to your stocks for a while. And you may hold on to them if it's not executed. Anyways, only do it if it's suitable. I really implore you, think about it before you do it. You may wish to try it on just part of your portfolio and see how it works. Anyways, enough for this. I'll probably do one or two more stocks and then get on to other things. Remember, always keep your money green. Always keep your money green, friends. And I appreciate it if you can subscribe to my YouTube channel. Until we meet again, may you prosper. Take care, friends. Bye now.